Good morning, I hope you're doing well, and welcome to today's edition of 600 Seconds of Trading. Today is Monday, September 24th, 2018. My name is Alejandro Zambrano, Chief Market Analyst with Trade Captain and Amana Financial. It's 9:22 a.m. in London, and it's time for a daily update. We'll take a look at the main markets. But before we start, as always, I need to stress that trading financial markets, unfortunately, is high risk. There's a general risk that we lose all of our invested money. Okay, let's begin, and we're gonna begin with the euro as we usually do. And on Friday, actually maybe it wasn't Friday. What day was it? On the 20th, so Thursday, the market rallied to the upside, and we had this big massive day here, and we took out 1752, which is a level I've been focusing on for a very long time. And in essence, we're just breaching a range here. Just imagine you can't even see this section here like that. Then it's clearly that we've been trading sideways for quite some time. And when we try to break, and if we successfully break out of here, which I think we have done, then I think we should be able to head higher. I think, in fact, we should be able to trade as a minimum 118.52, and then maybe 119.50, if not 120. And then we'll see, because the Federal Reserve, that's the central bank of the US, will raise interest rates this week. That's all already fully priced in. In fact, second rate hike in December as well is, I think, with 90% likelihood of priced in. So it's more about, will they be talking hawkish and try to lift rates, so suggest that they're going to lift rates even further in the next year. Personally, I think they're gonna wait a bit. If anything, they've been quite cautious with their rate hikes, very cautious, I think. So I don't really anticipate too much fireworks. Now, technically, last week I said, and before that, actually, over the last few months, I said we can buy the breakout and we can also buy the pullback. So on Friday, we got a pullback, and we are down here trying to carve out a low. The way this is looking right now, it looks quite healthy, and hopefully this is it. We'll just push higher over the next few days. So the day was to buy here on Friday, if not already this early morning, when the market was here at 1721. And if the market revisits the same area, I will remain bullish. And for now, I see no reason to change our bias as long as trade above 1668. At one point, however, you know, when this trades upwards, maybe when it's 18, probably 1820 or so, I think at that point we're gonna take the trend defining level and just put it below today's low. That means we'll have an effective risk of about 32 pip, so it's not that bad. Here's the pound, and I'm neutral on the pound today. On Friday last week, Theresa May made a very strong and powerful statement. It's available on, I think, 10 Downing Street, the website is. It's like going to the White House, but it's just the UK. Alternatively, I think if you can probably Google for it, but try to find the original. If you didn't watch it, you can watch the actual interview, actually, that's even better. But you can also just read the text. What's coming out from that statement is that it's very clear that there is the EU and the UK are not going to agree on a deal imminently. It's not 6 to 8 weeks, as has been discussed in the past. I think that's quite unlikely, and that's why we had this massive sell-off here in the market. As well, technically, we're a bit overbought, without a doubt. We haven't had a corrective move for quite some time. But what's interesting is that most of this push here is on the back of the comments about having some sort of a deal in the next few weeks. But the way things look like right now, it looks unlikely, according to me. What tactically here, I think what makes sense now is to be neutral. I think we concluded this little uptrend, and I suspect really that, you know, we might go up maybe to 31.50, 132, and then we just need to wait and see. I think if we take out the lows, if as long as trade below this level, there's a general risk we just go up and then sort of go down again. But a better market to trade if you happen to be looking to buy dollars, because when you sell the pound dollar, you buy dollars, right? Then out of the markets we cover here, I prefer this one, which is gold. Gold is trading sideways between the September 11th low and the August 28th high. I'm treating this as a rectangle. Some other people are treating it as various patterns. The important thing though is that most people, even if they trade things with like trend lines, they will usually try to enter the position on a break of horizontal support or resistance line. And if this market trades below the September 11th low, then you will have a resumption of this multi-month downtrend. And I think at that time, the price of gold could potentially decline to 1160. On the other hand, if it trades higher, it will suggest that we're probably going to trade upwards and not downwards. So this could be a better option than selling pound dollar outright, which is to sell gold against the dollar on a break to the September 11th low. We're having interesting activity in the crude oil markets. So this is crude oil, and as you know, we have this big triangle that suggests an objective of 74.46. Then you have an inverse head and shoulders, which suggests a target of 77.99. And we just reached these levels, and I'm actually going to get rid of these levels here. Sorry, these levels here, because it's starting to get a bit messy. Key point is just this: take out the September 4th high, and it's bullish. Now Friday was not easy, guys. It was a mess. Look at this market, all the way up, spiked upwards, and then all the way down. So it definitely shook out, I think, the weak hands. To be honest, it shook out me. I didn't trade on the break here. In fact, I already traded here. And then I was a bit scared about this move like that. And then, well, I wasn't scared, but I bought and I was down, and I had my stop loss down here. And I was so close to hitting my stop loss. So when the market moved up again, here I got out for a small loss. But if I would have kept it, I would have probably put my stop loss down here, especially after seeing that breakout, which means that I would have been shooken out for a full loss. Not a full loss, but because my stop loss was down here, but definitely for a bigger loss than I wanted. So it's a difficult situation without a doubt. The market though is on the right side again. So I'm bullish again. And I think here this market should most likely be able to trade upwards. Now, if it does revisit the breakout level and maybe trade a little bit lower, I think that's fine. If we're gonna follow the rules exactly of what a trend is, then as long as you trade above 70.11, this trend is bullish. Which means that there will be a risk of $1.50 and potentially make 6.5, more or less. 6.5 divided by 1.5 is 4 times risk-reward ratio. I did actually get involved here already, not directly here, but in a crude oil market product, and I suspect it's going to head to the upside. There's two tactics. Either wait for that pullback if one is not already long. Alternatively, maybe sorry, that's actually one of the only, probably the only good option. The other one is to the question is where to put the stop loss, here on Sunday's low or down here. But if you're trading this one, which is crude spot, then probably 70.11 is good. If not, maybe 70.52. The idea with 70.52 is that if this is a genuine breakdown, then it should not really trade much lower, right? That's really the case. And to be exact, this is actually what I traded. So I traded West Texas last week. Today I'm trading Brent crude. So Brent crude, I like it a lot because here is, you have a breakout right here. This is a nice breakout. It's a big candle. It needs to go all the way down here to sort of negate this bullish trend. Now, for some reason, it's not really clear here, but there is a gap here because the market didn't really actually open here. It opened somewhere in the middle and then pushed higher. So there is a Sunday gap somewhere in the middle. So my stop is pretty much down here somewhere. And again, any sort of revisits, I think people are going to be buying these. and then I'm looking for upwards move. Let me actually just show you what it is I'm trading so it doesn't confuse anybody. Here we go. I'm trading the December contract. So you see the December contract looks a bit different than your spot contract. And from this perspective, I'm treating this like a rectangle. And we already had a completion on this on September 11th, but didn't really have a lot of action. And now we're breaking upwards, and West Texas as well is breaking higher. So hopefully this is it, and we don't really revisit these lows. Here you can actually see the gap. So this is the gap. Closed here on Friday, open up here on Sunday. My rationale here is that, you know, we're trading on the other side of this level. We could easily revisit. I mean, we were trading here at 79.18 in the beginning of the day. We could easily revisit that, but if it's a genuine breakdown, it shouldn't really go all the way down here. Okay, let's look at the S&P. So this is the S&P, and we're working here with an ascending triangle. This is resistance. Actually, here's resistance. Here's the upward sloping support. We took out this level. A good trade would have been buy here at 29.17, stop loss here at 29. So risk 17 points to potentially make 41 points. So 41 over 17, that's 2.4 times residual ratio. As you can see, we moved up nicely all the way up here, so 25 points, so a little bit more than the risk. And now we're pulling back lower. So we didn't have so good news over the weekend as well. What's important for us, I guess, is the fact that Chinese government and US government can't get along, and the Chinese government decided to cancel a 5th round of talks with the American delegation in regards to trade. And also there was sanctions by the US against, I think, well, I know it was a Chinese military official, as far as I understand, because of purchases of military products from Russia. So the US has sanctions against Russia, and obviously they can't limit anybody to, you know, not buy from the Russians. But what they try to do is that anybody in links with, you know, block bank accounts, and they can also say, okay, you know, don't deal with this person here, because even you might be in UK, right? And they say, don't deal with that person here, because if you deal with that person, you know, we're going to put sanctions against you as well. So there's a lot of these diplomatic wars and trade wars going on, and that's obviously frustrating the market a bit. But technically, we're still safe and sound here. We're still dealing with an uptrend, so there's no real reason here to do anything about this. So I think this could head to the high and then eventually upwards, but it's not necessarily going to be easy. And now, guys, I don't want to be sort of doomsayer, and I do think we're going to have more action to the upside. If this is a triangle, I mean, it is a triangle. And this is a setup I shared with you guys already in July. Yes, in July. That's a long time ago I shared that with you guys. It does suggest we're gonna probably head upwards and touch 3,019. But eventually, I'm not saying we need to have a big decline like this, but we will have a steeper decline. This was a decline of 12%. And maybe it'll happen now, maybe it'll happen afterwards. 12% will technically take you down. From that target, it will take you down like this much. So we're gonna have some sort of a shake out at one point. And we just need to be ready for it. And what's interesting is that all of these people that don't really telling you to sell and buy gold, sell stock markets, Like the market is going to collapse. It's the people that made that into their profession to be the doomsayer and just sort of warn everybody about all these risks. Some people cry wolf all the time. Like, I go to Zero Hedge sometimes to read, but it's very seldom. I've been following that website, for example, since 2000 and maybe 2011 or something like that. Many years. And they're always crying wolf. There's nothing positive on that website, usually. It's always, oh, look at that data from the US. Oh, it's not looking good. Oh, look at that. Stock markets is exaggerated. You need to be careful what you read and stay objective. It's okay sometimes to go to those websites and find interesting ideas. So somebody posts this interesting idea about an interesting indicator, and then what you should do is you should try to replicate that indicator and then try to see if it makes sense. Because a lot of people talk about indicators that don't make sense because they don't do proper research. They just because something happened once or twice doesn't mean that it's going to happen all the time. So every time you develop or look into something, especially in financial markets trading, it should have happened at least a few times. Obviously, if you're looking at signals of the last 150 years, then you might not have a signal every year. You might have a signal every 10th year. So you have far less observations. But in every time it is like that, then you need to be mindful and be careful with it. So, and what's interesting now, I think people will continue to sort of give up on stock markets, and then at one point your favorite bear is gonna say, "Oh, it's time to buy." When that happens, it's time to sell. Some people are just wrongly wired in their heads. I'm not kidding you. They're wrongly wired in their heads. They look at their own situation and then say, I am in a bad state. The market should not be good either. That's totally wrong. Here's the Dow Jones. Sorry, this is not what I want to show you. I want to show you the DAX. There we go. Here's the DAX. DAX is looking good. Short term, yes. Long term, no. You have the Dow, which we discussed. You have the S&P that we discussed. You can take a look at the NASDAQ and Russell 2000 as well. Those are markets that are trending upwards. Those are markets one would like to get involved with. Here, we're still dealing with that downtrend. And it would be natural for this market to try to roll over here at one point. I'm not saying it's going to tumble all the way down, but it's still in a downtrend. So I think here at this junction, at these levels, doesn't make any sense. I think if it would roll over, then that would not surprise me. Now let's talk a bit about cryptos. So we had a massive move, not a small move, but a massive move in Ripple. And congrats if you actually held on to that move. So we were analyzing, we even got a question about this when the market was down here. And I said bearish below August 18th level, and then if you take this out, we're probably going to head higher. So we definitely head higher. And usually what would happen is that the market will correct a bit. But because these are crypto markets, they are a bit crazy. So it didn't correct. So it just rallied all the way upwards. Now, when you have such a gain like this, you need to sort of look into what's going on with all the other markets. Are they rallying with the market or not? If they're not rallying with the market, then it's probably a good opportunity to book some profits. Because unless all the other markets ends their downtrend, it's likely really that we could see some sort of capitulation. People give up here. So I think here there's not like a solid trade idea at all, to be honest. But I think maybe if it goes down a bit, one could potentially get involved. But I'm very, very careful here. What I would do instead is that I would look at another market and like to try to get involved with that one. Alternatively, here maybe, and this is a Ripple, and maybe a break to 60 cents per coin. I think that's probably a better idea because you're dealing with an uptrend, right? And what you want to look for here is the breakout above this high. Take out this high, and you might be, you risk $10, 10%, sorry, and if it goes upwards, you make 24. So that's 2.4 times risk reward ratio. and it's only if it starts to break higher, maybe hits that April high, that makes sense to, I mean, from that perspective, it could be interesting. Now, what's also interesting here is how the psychology of crypto traders might now change. It might be now that people are saying and feeling, wow, look at that, look at Ripple. And I think a lot of people said, like, let's look across all the other coins to sort of figure out what could be the next winner. So far, there hasn't been a next winner. Ethereum itself is still in a downtrend, as you can see. And I think the only thing that had a bit of a potential break here that could potentially be interesting is Lumen. Lumen is right now the only thing that successfully also ended its short-term downtrend. It took out this high here, which is 24. Now the market is at 26, and I suspect as long as you trade above 22, we'll probably trade higher. So this will be a risk of 13%. If we hit the high, you make 27. It's 27 over 13. That's 1.76 times the risk-reward ratio. But obviously, half of the whole idea with these cryptos, though, is that when they trade upwards, they trade crazy. So the problem, though, is that I don't know how they're gonna, if they will trade crazy. But if they do, then you're risking 13%, and then it maybe makes 73. So 73 over 13. Now that is 5.6 times the risk-reward ratio. Now that's a good deal. That's a good deal. As always, you need to compare all these cryptos with any other market that you're trading. The risk-reward ratio at the end of the day is a risk-reward ratio. Now this is Bitcoin, and Bitcoin is not at all sort of trading along with the overall view or the overall trend here. This is the September high, and we need to take that out. I think when we take that level out, we could potentially rally up to maybe 1,000 eventually. So that's a nice 30% return. And I think at that point is where we see more and more out of these big markets joining. I think what you want to do is look at Bitcoin, look at Ethereum, Ripple, Bitcoin Cash, EOS, Litecoin. See if more markets are starting to turn bullish. If they do, then that could be an indication. If you have maybe 3 out of the top 10 being bullish, then you can probably, sort of maybe work with those pairs, potentially just working. It would be fair to assume that maybe more and more are going to turn bullish as this goes viral. And that's it. So no major plan here for Bitcoin. I think still probably need to wait for that September high. Maybe Lumen, as I just mentioned, this could be something. Maybe let it correct a bit more. This is a breakout without a doubt. Yesterday, nice close on the other side, and this is a rectangle. From a rectangle perspective as well, like it suggests a 40% return, which suggests that we can go upwards here. So probably strong trade above 22, or potentially, if you want to not be too far away, 23.80. That should be enough. And that's it. Good morning, David. Thanks so much for joining me this morning. And good morning, everybody else that's watching. Ugo as well. Maurizio. And Mahmoud. So it's good. Guys, thanks so much for joining me. It's good to see you guys here. Unless you have any questions, guys, I think we're going to wrap things up. And as well, don't forget to like the video. Don't forget to retweet us. Don't forget to follow us. It's really important, actually. I'm not joking. Why? Because the website is new. It is 1 year old and a month, more or less. The first post I ever did was in August last year. So follow us on Trade Captain handle, retweet us, follow us on YouTube, like the videos and things like that, because it's a young project and we're doing good. But the owners of the website, of course, they want to see it grow more. So it's important to show that we are growing and we're getting more and more pictures, not more and more pictures, but more and more interaction, readers, so they continue to support the website. It's as simple as that. Everybody has a benefactor somewhere in the background, and this website definitely has one. Okay, so I got a question here about the Italian stock market. So let's take a look at the Italian stock market. Okay, so this is the Italian stock market, and I was actually bearish on the break here on August 10th for the market to head to 2000. we went as low as 20,219. If we look at it from a bigger perspective, the market is capped by this high. We're having a retest of the whole breakdown. So this is the break or the decline. That was that weekly candle. If we look at it from a daily, this was the actual candle, and we're actually on the other side of that candle now. So that bearish view to sell here is over now. We took out that level, and there's no point being bearish anymore. If you just look at it from sort of a traditional trend following perspective, I would guess that maybe we'll try to roll over here and move downwards again, but I still think you're probably going to deal with a few more days of maybe bullish action like that. So I wouldn't sell this. There's not a good sell case. There's not a good buy case either. So I would ignore this. My gut feeling tells me that maybe we'll go down a bit. Trade sideways here be a bit messy. And if the big picture trend resumes, then maybe we'll head to the downside. But it's not going to be an easy trade. So if we can ignore it, I think that's better. Okay, guys. David, Maurizio, Ugo, Mahmoud. Guys, thank you so much for joining me this morning. Don't forget to hit that like button. Just click here and like the button, like the video, like the button. And don't forget to share our stuff. For example, if you're on Facebook, just click here, for example. You share the morning update, you click here. Shows like that. It asks you, like, this is my personal, but if I put it on the Trade Captain, like that, post to Facebook. Very simple. And now it's published on Facebook. So stuff like that, small stuff like that, it helps a lot. So please help us. And so with Twitter, LinkedIn is also very straightforward. Twitter, though, on the other hand, is a bit complicated. You click here. And then, actually, it's not complicated. It shows you the title. The only thing it doesn't show you is the image. And then click on tweet. And it goes out like that. Very straightforward. Guys, have a good day. Thank you so much for joining us. And I'll see you guys tomorrow about 9 o'clock London time. Thank you.